Well, gentlemen, the market's not really sure which way to go at the moment after the PMI data out, but we had good PMI data out of China,
in fact,
out of the
to
US.
be honest, we hit a new high on Friday, over 38,000 on the all-share index, and I really thought when I read
a life high. It was a life high.
When I saw this morning's number, when I saw the PMI and I read it this morning, I thought, okay, another new high today. And yet it was the resource market that actually took us down. Gold shares were pretty weak, platinum shares weak. In fact, generally across the board, I liked the quarterly report that came out of Sasol. To me, it's still one of the cheapest companies. Sasol was down a few hundred cents today. So very, very difficult to try and read this.
Chris, the market not trusting those PMI numbers.
No, I think the rebound in the PMI numbers, I think, is quite encouraging. Just one wonders what the, how long it will actually last. That's the big thing. But at least there is signs
so people
of
really don't trust
stabilizing.
him.
Yeah, I have a feeling though that the PMI numbers are not the most important thing worrying the markets at the moment. And you can pick this up by the way the market actually does respond to data. The fact is we're still mainly in recession. At least China was at least something that
and US was looking better.
But I'm not so sure if that's what the market's preoccupied with. I think there are other things. I mean, the rand, for instance, responds to the trade number on Friday. The trade number is a curiosity figure, if you like, normally. And you can go through decades of data and find that the trade value, that the trade number, when it comes out at 2 o'clock on a late Friday and all the rest, it really does nothing for the market. When it does respond, you know that the deficit then is an issue, and the market's starting to actually concentrate on that as an issue.
David, a comment from you on the front?
At 100 billion in the first 10 months, it's an issue because that has to be financed by foreign income coming in. And the big question is how long will foreigners continue to finance that gap for us, against a deteriorating political and social backdrop.
Well, the seasonally adjusted Kagiso Purchasing Managers Index remained in contraction for the third straight month in November. Local PMI rose to 49.5 from a year low of 47.1 in October. The data also suggests that manufacturing will make a low contribution to gross domestic product in the final quarter of the year. Joining us for this and more, George Glynos, the Managing Director of ETM Analytics. Well, there, Chris saying that the market is preoccupied with things other than the PMI data, but at least it's moving in the right direction, still in contraction.
Yeah, but I think that's the point. It's still weak, and it's weak off a relatively weak base, which I think is also important. If you have a look at some of the subcomponents that help this, if you want to call it a slightly less negative number, it wasn't so much things like the forward-looking indicators so much. It was things like suppliers' performance. It was employment, which in the PMI, our PMI hardly ever goes positive. It actually went a little bit positive, but that's hardly ever sustained. If you have a look at the data of the past 3-4 years, you'll probably find there's a bit of a seasonality perhaps in there that may have crept in, or perhaps it's just some sort of a normalization of a very weak number the previous month. So all in all, I think perspective required here. Europe's still shrinking, as Chris pointed out. The UK is not looking particularly brilliant. Those are the two significant markets. It shows you the kind of demand conditions that are coming out of Europe, and so ultimately I still struggle to
David,
get too optimistic.
I'm trying to be upbeat, but I can't with the economists in the room. It's impossible.
I'm actually upbeat because, the fact that we're at an all-time high and there's no suggestion of weakness in foreign markets, I think next year markets will draw their strength from America and a turnaround in China. We just got to hope that Europe stays where it is now and doesn't give too much trouble. In fact, there was a comment today by Angela Merkel saying that probably, she used the may and possible and all those, but what she was trying to say is that she thinks that down the line they're going to have to accept a Greek write-off. And I think that kind of news will start to also give us a little bit. The acceptance of where Greece is and where those nations are, I think will also give us a little bit of positive news.
Yeah, I think they're trying to find a way out of their hole. But I think it still is a crisis of the welfare state, and they're not dealing with that. as an issue, and then interest rates are too low. You cannot generate savings, which is the resource you need to fund your growth, at those low interest rates. And
I want
that's
to
why.
pick up on a comment that David made, though. Is it that markets will find some strength in the Chinese and the US story as we go into the new year?
Well, I think they're looking for positive news. So, I mean, yes, the US is looking a little bit better, but the US really hasn't dealt with their fiscal issue at all yet. So, and you have the likes of your Paul Krugmans and whatnot saying that the policymakers haven't done enough. So he'd like to see even more QE, and he'd like to see an even more aggressive.
There's a new book out there. I think he's just written a new book on exactly on that.
Even the high professor Goldie Hawn, a tweet came out from Goldie Hawn the other day saying, "Are we going to fall off the cliff?"
So
everybody is talking about the fiscal cliff in the US.
Precisely.
Do you think Goldie Hawn knows what the cliff actually is?
She probably does, to be honest. It's hitting just about every headline that I can see at the moment. But so on that front, I'm still not convinced about the US. Yes, they will go through a sugar high. They will go through a sugar high, and I think the fact that they're targeting mortgage-backed securities and whatnot is boosting. We're starting to see that boost coming through in the housing market. So you'll get a bit of a wealth effect there, and the US will look better for a while. But they're really not dealing with the core issues like Chris was talking about. And so far as China's concerned, well, China's an interesting case.
Well, let's just get David to back up his statement there. Why are you so positive about the US, then move on to China?
Because I think that I'm a great believer in psychology and a great believer that when you feel good, you actually go out and spend. And I think that as property prices start to pick up, there's a huge amount of cash or liquidity in that market. That's available to be spent. And I think that as people start to feel better about the US market, about housing, they'll go out and start spending. And the headlines will actually drive confidence.
But is the sugar high sustaneable? That's what George is going to ask.
That sugar high can last a couple of years. Eh?
I would say, when you're focusing on spending, what worries me is there's no saving to back that. All right, that's the first thing. And once it's spent, that's exactly what it means. It's spent for consumption purposes, and that's where I think the fallacy has come in economic thinking, is that you've got to get people to, if necessary, borrow and spend money, and that's what's happening. In other words, you don't have something that can actually last. Beyond this. We often say perception drives reality, but I think sometimes reality also drives reality. And at the end of the day, if you've got too much debt, right, you can start believing you don't have too much debt and carry on spending. Nice retail therapy, as it were, but that doesn't resolve the reality that you've got too much debt, right, and it needs to be dealt with.
No, I mean, Chris is preaching to the choir here, because we feel exactly the same way.
We've got the negative camp in that corner.
Well, it's not negative. It's a case of understanding economics in a slightly different way to the consensus thinking out there. And the consensus thinking is that you drive spending, you create this aggregate demand, and everything just kind of takes care of itself.
You see, David? Stop consensus thinking.
Well, so here's the reality, is that it can work for a while. Okay, the problem is that when you have a look at what's happened now, the situation we're in now. I mean, we had Greenspan reduce interest rates back in 2003 down to the 1%. What followed that was a massive credit bubble. We had a huge build-up in debt, not just private sector, but public sector as well. So we effectively borrowed from the future to spend. Now we did. We had a tremendous boom, and it felt wonderful, and everything was going to carry on forever, and
illusion.
Property markets were going to go on forever, and it was all great until suddenly it wasn't. And the reality came back to bite. And the problem with persisting with that kind of policy now, when we're already at a fairly indebted level, is that you are pushing the boundaries of what's realistically sustainable in a normalized environment. And that's where the concern comes in, is that what we're witnessing right now is potentially sowing the seeds of something far more traumatic in the future. So it's not to say that for the next couple of years we don't, experience something that's a little more positive than another recession. It's to say what follows that. And I'd like to sort of turn the conversation to say, let's not think of the next 2 to 3 years. Let's have a look here at the next 10 years and 15 years and try and ensure that we don't land up like another Japan.
Yeah, and I think you say negativity because we're focusing on the developed world. The emerging markets, I think, are an opportunity that's constantly opening up. South Africa used to be situated in the worst neighborhood in the world. This is now one of the best neighborhoods in the world when it comes to economic growth and opportunity. That's why, if we want to speak about Europe, I think, for instance, France is the next country that's going to be falling on its face very soon. It's not going to, I don't think they'll last next year, for instance. They're going to join Spain and Italy.
David, save the conversation. France is going down the tube.
I
Now
will
jump
say
in.
that, you know where I listen to this and I know it's this is
Ghana
You feel
isn't.
depressed when you leave this
I
newspaper.
don't feel
But
depressed.
Ghana, Nigeria, and Kenya, and Mozambique, these are countries that are taking off in a big way.
There we go.
You know what I do? No, you know what you've got to do? And I keep saying this to a lot of people when they start to worry about it. I said, I don't like economics and I don't listen to economics. What I do is I read balance sheets. So I will go and I'll read Richemont's balance sheet and I'll see how many watches they're selling, which are real watches to the Chinese who are actually buying them and paying for them. And if you look at it from that point of view, and the example that I always give, no one would think of going to invest in Spain, because Spain is a
But there's
basket case.
opportunities
And
there.
yet you go into a company like Inditex, which we know as Zara. It's a brilliant company. Mr. Ortega is now 5th richest man in the world. So you will find brilliant
Exactly.
companies. So rather look for those. And Chris makes a point.
But I
with
agree, there
Africa.
can be a disconnect in the investment opportunity set versus the economic. And the economic macro environment sometimes drives market performance, sometimes it doesn't.
We could go
Yeah.
on all night,
Yeah.
George. David doesn't like economics. He looks at the company balance sheets. You've got right to respond.
Sometimes I don't like economics either. It's also to say, I mean, we've picked up on that disconnect. So it's not to say that, interestingly, for those that are listening, I've been bullish equities now for the past few years. David knows it. It's not that I haven't been bullish equities. Some people say, how do you reconcile that?
Yeah.
Well, I reconcile that by pointing to the kind of policies that are being implemented.
The sugar high.
The sugar highs, and it's not just that. There's a lot of money creation taking place at the moment, and you can hide away from that fact, but it's a reality. And that money creation does have an impact, and it does impact on markets, and we know that they've impacted on
One more
equities.
question before I let you go. Goldie Hawn, respond to her. Are we going to fall off the fiscal cliff out of the US?
No, I don't.
No, for Goldie Hawn.
We fell off the cliff 4 years ago.
There is
We
no
just
such thing. It's just it's a mixture and a muddle of different versions of economic policy.